Hello and welcome to Learning Objective 6, determining the level of sales needed to achieve a desired target profit. All right, so this is kind of interesting because it is the answer that we're going to get as far as suppose a company wants to know how many units must be sold in order to earn a profit of, say, $100,000. All right, so we would literally take our break-even analysis that we just did, so our fixed costs divided by contribution margin, and then we add whatever we want above zero. So before it was our break-even or target profit was zero. So now we just have to add in whatever we want to earn to the fixed expenses. So here we see that we have 80,000 is our break even. We want $100,000 in profit. Our base case is $200 per unit for contribution margin. Therefore, we need to sell 900 units in order to have a target operating profit of $100,000. All right, so that's kind of cool. If I look at a new slide here, so where break even was equal to fixed costs divided by contribution margin. Let's do a little. Then our target profit simply adds whatever we need to do to the numerator, target profit divided by the same contribution margin. Because instead of a target profit of zero, I guess maybe we can even just call it target profit. If we want to break even, that's like target profit equals zero. So we just add it to the numerator in addition to our fixed costs. All right, so this is what our formula would look like. And so these are same, just different. Target profit, we just typically would call it target profit because nobody wants to just break even. You don't go into business to do all that effort just to like not make anything. You certainly don't want to lose anything, but what you want to do is make that 100 grand, etc. More. All right, so let's take a look at an example. Feel free to pause the video, give it a go, and we'll see you in Excel or Google Sheets, I suppose. All right. What level of sales will provide a target profit of $2,500? All right, so let us look at our target profit analysis. So we have our fixed costs of 3 grand plus our target profit of 2,500 divided by our contribution margin, which is going to be 4 minus 1. Level of sales dollars, so this is our units. So then we need to go like this times by our cup of coffee, and that gives us our sales dollars. So this would be in units, this would be in sales dollars of 7,333. So for C. Perfect, awesome. Let's do one more example. So feel free to give this. Ooh, we're looking at after tax. What are we going to do with taxes? Alrighty. Give this a pause and we'll walk through the next Google Sheet. All right, so the tricky thing here is just understanding what we have as far as after-tax profit. So before we do that, let's figure out what the before-tax profit would be. So if we have an income tax rate of 20%, that means that we get to keep 80 cents of every dollar. So in order to find out if we have after-tax of 2,500, to find out before tax, we divide it by 0.8. So that's 31.25. And people, I hate dividing by decimal for whatever reason. So I always then say, okay, cool. If this is our before tax, then our after tax is this times by 0.8. And 2,500, does that match what I had? Yes. Okay, cool. Now I'm happy. Great. So our before tax profit to yield 2,500 after tax is going to be 31.25. So that's our before tax. So now, because all of our other factors and figures are before tax. So now, in order to find out how many sales dollars will I have to do, now I am going to go back to what we just did before. Our break-even expenses before tax are 3,000 plus our target before tax profit is 31.25. And so I'm going to put these into brackets because I'm going to be dividing them by what am I going to be dividing them by? I'm going to be dividing them by our contribution margin, which is 4 minus 1 equals 3. And that gives me my number of units. And so then that times by my $4 in sales price gives me my total number of sales that I need to hit. So this is units and this is going to be sales. Awesome. All right, so let's take a peek. And we see that D is in fact the correct answer. So just making sure that we then calculate everything first in before tax dollars before applying our same target profits formula to it. Awesome. That's it for this video. I will see you in the next.